What's up, everybody? I don't know why I'm streaming. I'm just doing more live streams because if I if I'm alone and I try to do research, I'll probably learn a little bit, but I think I learn more if I'm streaming because I'm actively like engaging. Um, I try to I was trying to like pass this exam, the enrolled agent exam, which is given by the IRS. So if you pass it, you can do tax returns. CPA could also do tax returns. So you have to be a CPA or an enrolled agent to do tax returns to charge money. You can do tax returns for free for family and friends, but to charge money, you have to have one of these certifications. It's just so boring trying to study for these tests. INMB. No. Is that the ticker? Okay, you said it in a way like it's a TV show or a movie. Are you watching it? INMB. Hey Victor, what's going on? If you want to join the stream, let me know. I invited another friend actually. I don't know if he's gonna do it. I told him to anybody can join the stream. We can just talk about things. You don't have to have like an expertise in anything. We don't have a million viewers. It's just kind of just bullshitting, and but you'll learn more if you in a setting like this, because if you're by yourself, at least I know when I'm by myself, it's hard to learn. It's hard to just sit down and focus for hours and hours. It just gets so boring, unless it's something you love, like if it's like a sport and you go and play golf. Yeah, but hey Victor, how's it going?
Hey, what's up, Scott? You hear me okay?
Not much. So I was just saying, I think it makes sense that you'll learn more by like doing things like we're doing, like making videos or making content. You'll learn more about stocks than just sitting by yourself reading it, because you have to actively engage in it. Do you agree with that? Or
Totally. I would also say that, it really becomes more enjoyable when you're like working with others and you kind of like maybe you bring something to a collective
yeah,
group of investors and you put some, effort into knowing a stock and you go and share it with them. And then on the next stock, somebody else did the same. So pretty soon, if you're working with 10 investors, it's like I got to learn about 10 stocks, but I really only researched one. So don't be afraid to start collaborating because there's a lot of value that you can get out of it as an individual. And when you contribute to it, everybody else gets value.
that's a good point. I remember when I was studying for the CFA, when we were in groups, we would like one person would have to like present that next topic, and when you present it, you it ingrains it so much more. And then when people give you feedback, it yeah, especially with stocks, you learn
Yeah.
a lot about stocks like you wouldn't have thought of. And someone mentioned a stock like INMB, which I'm not too familiar with. I imagine you're not either, right?
No, I
It's
started looking at it when it came
oh,
up, but I'll catch up
140.
and give you a comment
What's
on
that?
it. I will look at it and give you a comment because I started to look at it when it came on the stream.
Yeah, I mean 145 million market cap, so it's a tiny speck of a company.
Yeah.
145 million seems like a lot of money, but in terms of publicly traded company, it's nothing. And you can see
Yeah,
it's
that
really
zero revenue pretty much. It's totally speculation. Like if they make it, you're gonna make 100 times your money. If they don't make it, you're gonna lose 100% of your money. So it's either going to be 100 times your money, or it's going to be 100% of your money goes to waste.
This is how you do it mathematically, although I don't know the exact how you apply the percentages, but you do something like this when you do those models. Like say you put $10,000 into it, and you assume there's probably a 95% chance it'll go to zero. And 5% chance you'll 5x. It's a pretty basic way to do it, but so in this case you would do it because your outcome is $50,000. So that's assuming it's 1 out of 20. It's probably more like 1 out of 100. It's gonna 5x.
That's a good way to think about it. But, if the way I think is you'd want to diversify, right? If you make one bet, you have a 95% chance of losing your money, all of it. But if you maybe said, hey, I'm going to do it across 10 companies, then
exactly.
If one of them hit, you broke even. If 2 of them hit, you made $50,000 out of $50,000. Or I don't know. You went 10 companies,
That's how
$100,000.
Private equity firms do it. Like they say, if they're batting a 20%, like batting 200, they hit 2 out of 10. They could still be extremely successful if those two, if even one, 100 X's, which is hard to do. But if you drop a million into 10 companies and 9 go bankrupt, 100 X's, you made a ton of money. That's a lot of people. What's his name? Jack. Jack Ma is the CEO of Alibaba. But Masayoshi Son, SoftBank.
Yeah.
He put, I think it was like 50 million into Alibaba in like the late 90s when they were a startup, and that 50 million turned into like 50 billion. And so if he strikes out for the next decade, he's still way ahead of the game. Just that one bet alone made his company.
Yeah. I would say, just my investing philosophy plan is invest in things that I understand, right? So like I've spent a lot of my career in enterprise software, enterprise technology, like in a kind of a particular type of business use. So if I looked at a startup that was in that space and I really had an information and knowledge advantage, maybe I would invest. Because when you invest in pre-IPO companies, you're taking a bigger risk because the information that's available isn't as good. It's not vetted by other investors as much. You really need to depend on your own knowledge of that industry. Now, if it was like the company that came up, which was Immune Bio, I'm out because I have no information knowledge advantage here. I have none. This is life sciences. This is biotech. I'm out. I don't have the deep knowledge to be able to say, this is a great idea. If these guys have a greater than 5% chance of making it, they probably have a 20% chance. I can't tell you that. But if you got into my industry where I'm really good, I could probably tell you that. If you showed me a company and said, this company is going to work, what do you think? And I'd be like, yeah. In my industry, I could tell you if it's going to work or not work, or have a qualified opinion on it.
Right. That's true. That's like what Buffett says to just focus on the companies. That's why he has a lot of insurance. He understands insurance. So if he looks at an insurance company, he can figure out whether it's a good value or not. And if he looks at a tech company, he can't. So he just avoids tech companies. But I mean, I have a hard time. I would never invest. I pretty much almost never invest in a stock that's below 10 billion. And I usually keep it where above 100 billion because I don't know. I don't, even if I identify a good company, it could take years, sometimes if ever, to see the value. So I just stick to like really good companies, and that's where I made almost all my money, is just on really good companies that I thought were undervalued, like Costco. I bought Costco I think at an all-time high, but it's up 200% since then.
Great.
So
Good job.
in April 2021, I got it at 355. I wish I bought Nvidia at all-time high a few years ago, or even a year ago, because it keeps breaking its all-time high. Or
Mhm.
Bitcoin. Yeah, when I bought Costco, it was in 2021, April 2021. It's hard to tell. So a 355. Yeah, it was pretty much trading. It's hard to see in this chart, but like I bought it right here, and it was pretty much trading at its all-time high. It's not like and now I bought at 355, and now it's almost 1,000.
Nice.
So it worked out. You don't have to always wait for 52-week low or a low.
Mhm.
Although it is better to not buy a stock at its all-time high. But if it's early in the game, which I didn't think it was early in the game when they had 150 billion market cap, but
Well,
apparently,
let's stay in that point you just made, which is, hey, you found a high quality company, and just thinking how I go through it, right? High quality company, believe in the business, believe that they have a very good future. That big picture is totally, it's a good decision. So what other companies resemble Costco? When did you buy it? How many years ago?
in 2021.
So 4 years ago. So let's think about other companies that are like, whoa, the stock price is not overly discounted. Maybe it's priced fairly. And first stock I'm going to think about is Amazon. I'm an owner of Amazon, and maybe I should start buying more shares because the future is going to be bright for Amazon, right? And,
Yeah, I like Amazon too.
Mhm.
It seems like just because they're huge companies doesn't mean they can't get bigger. Because I think the way things are moving with AI, companies, most of them will benefit a lot and take the lead on it, which it seems like they're doing.
Yeah.
But who knows who the new company is? I wish I could figure that out. Who's going to be the new next Nvidia, the next $3 trillion
big company. Yeah. I have a couple of ideas there. The first one I would put out there is Coinbase, and there's reasons for it. They have, and did you want to talk about Immune Bio anymore? Or?
I don't know if there's much to talk about because it's pre-revenue, and it seems to,
Yeah, it's a really little company.
Yeah, well, let's move on to a company with more information. So Coinbase.
Yeah, let me tell you my vision of Coinbase, right? So I started investing in Coinbase. I waited for the trough because when they IPO'd, I don't like buying IPO stocks. They tend to have like a period of kind of excitement, a lot of interest, and then they tend to sell off. And you can go to quality businesses, you can go to low quality businesses. It's the same thing. So I bought a couple years ago at a good price, but the first business Coinbase had was the whole, cryptocurrency exchange, right? Where you can buy coins, you can store your coins, it's a wallet, that kind of thing. Okay, cool. But now they're trying to go into two big businesses. First one is the whole stablecoin business, which is
My computer or his computer?
What's that?
Oh, I didn't hear you for like 10 seconds. So I didn't know if that was my computer or your computer that.
Oh, weird. Oh, okay.
Now I can hear you fine.
Okay, good. So it's mentioned, Coinbase the reason that I think they're going to have a real bright future is that it's not one business anymore. It's really four businesses now. And I think of Coinbase as a cryptocurrency exchange where you buy, sell Bitcoin, Ethereum, and so forth. And that, in fact, is their core business. But they now have a business that's harder to see because it's an institutional services business. The big, brokerages want to have crypto on their platforms because they don't want to lose their customers' attention, and they use Coinbase as really the company that's managing all those Bitcoins and so forth, and they pay Coinbase. So it's like a nice institutional business. It's kind of like, how some of these platforms do really well, like symbol ICE, ICE, that's a platform.
Right.
And so Coinbase started that business, and that's in the business now, looks good. And they're trying to start two more businesses. One of them is pretty much there, which is stablecoin platform. Circle's number one partner is Coinbase. Coinbase is partnered with a good number of companies where Coinbase is going to be the stablecoin platform. So that's going to be big. And then last is exciting. They applied with the SEC to be able to sell stocks on Coinbase, and they're going to be sold on the blockchain. And it could open up 24/7 trading because it'd be on the blockchain. It'd be very transparent. It'd be, I think, the future. So Coinbase, back to what's a stock that can go 10x, 20x, 25x? Coinbase. It's a company that I think can go there because their business it's not one. It's like Amazon. They didn't stop at selling books online. They went from books to selling everything. Then they didn't stop there. They went into streaming services. They do Amazon Web Services, which is now the most profitable part of Amazon. They're going into robotaxi. They have the Zoox service. So they just keep expanding. Well, that's what Coinbase is doing within cryptocurrencies and in the digital economy.
Yeah, that's if you're not innovating, you're falling behind. I'm trying to get all the peaks, and so
I think you've evaluated Coinbase on your channel, right?
Yeah, a few times. It seems like a good value. It's actually trading at IPO, ironically. Pretty much, it really IPO'd for $350. That's a pretty big price to IPO.
It was in the euphoria, the excitement of crypto, and it's like, wow, how high is Coinbase going to get? Well, it went much higher. Bitcoin's much higher. It's trading at like $107,000 per coin now. I have Coinbase trading at a 13% premium, but this is a type of stock, kind of like your Costco example is. This thing, what you can't price into the stock is the new stablecoin business, which is new. You can't price in the potential new business and putting stocks on their platform. So those opportunities you're getting kind of as part of the stock. So the stock values well, but not quite where their stock price is. It's gone up a lot in the last month. And but it's one of those where I'm like, this one can really go up over the next 5 years, 10 years, could really, really go up.
Yeah, it looks like, there's definitely that, especially with crypto growing. You missed out. There was a good year, maybe close to 2 years, year and a half, where it was trading below 100. This would have been a great time to get in if you avoided the IPO and then just waited it out. I remember when it got low, and I still thought, now it's back up to where it was. But if you're saying it could hit 1,000 a share, it could triple from here, which it could, like Costco did it for me, then it's still a good value. Because I don't know if it's going to come down if it does come down, it usually has these resistance points. You can see it didn't fall. It didn't hit 150. So it probably will never hit 150 again. So if it does come down, it may come down to like 250, 200 at the lowest before going to a new record. This is good. This
Yeah,
is good information. What's that?
Coinbase, I'm up 183%, and that's over like 3.5 years. So I'm hanging on to all my shares, and we'll be adding shares to this one because, again, the big story is attractive, and I think the market is a little expensive right now. We had a really nice month of June, great, but I'm not buying shares at a rapid pace. I'm kind of just waiting a little bit, trying to preserve, maybe grow some cash because the market is a little expensive. I'm doing really well this year, great. Don't need to overextend myself. And when we have a pullback, I'll probably buy more shares of Coinbase as well as some other stocks that I want to increase the number of shares that I own there.
Yeah, it is hard when the market's up so much. I hate Yahoo Finance. It doesn't. I know some people who've been saying forever. They keep saying, "Oh, the market's overvalued. The market's overvalued."
Yeah.
I mean, you got to invest sometime. You can't just sit out forever. You just got to go in. It's always going to seem overvalued, and then when it's not overvalued, that's when people don't invest. Is when the market goes down, then they don't invest.
And everybody's afraid, like, oh, it's going down. When's it going to stop going down?
And you can't you don't know. So then when it starts going back up, then you're like, okay, it's going up now, but I don't want to buy because it was just 20% lower. So I'll wait for it to go back down, and it never does. Just got to get in sometime and hold. I mean, this is kind of a crazy stock. You can see it. It just, I can't believe it IPO'd for 300.
Yeah, IPOs to me are dangerous. Like we just had Circle, which is similar to Coinbase. And when you compare, so just as the example is that IPO'd really high. You have CoreWeave that IPO'd really high. IPOs are beginning to work, which the IPO market's going to get more active. So that's interesting. But I just don't want to buy in IPOs. They just 80% of the time they're big money losing situations, and I don't want to be any part of that.
Yeah, in this case, that's pretty much at the peak. I did hit a peak a few months after IPO, but that would have been a terrible time to buy this stock. At this point in time, I mean, 5 years from now, if it's 1,000 a share, I guess it doesn't matter. If you got it at 375, but yeah, you missed a lot of opportunity here. But that's when everything was crashing. Like Meta got down to like $89, so everything was crashing this time.
At the end of 2022, you could have just put a blindfold on, bought 20 different stocks, and you would have done great on 15 of them.
Yeah,
it was just so good because it was so discounted. Now I'm not smart enough to tell you like, oh yeah, I knew at the moment that was the point in time when it was going to hit its low, but I was wise enough to know, okay, the market's oversold, so I just kept putting capital into stocks. I kept buying Meta, I kept buying into Coinbase, I kept buying into these companies that I believed in, knowing that, hey, I don't know when the bottom is going to be reached, but once we go up, I'm going to be really glad that I bought at those times.
Yeah, because if you own stocks, what are you going to do? You're going to sell your stocks to buy other stocks? You could do that, but how do you know which ones are? But if you could come and get into some cash at this time, yeah, you could have pretty much made money almost anything. It's put into S&P 500. You could have made money doing that also without having to think. Yeah, Circle.
So I sold going back to that chart, like I sold one of my real estate properties in 2022, and I bought it for 325, but my down payment was really my capital outlay was 75,000 because you don't buy a property for cash. And then I sold it. I owned it for about 9.5 years, and I sold it in 2022 for 980,000. So I walked away with a really big profit. That gave me capital to buy stocks in 2022, and I put that capital to work. And it was a smart move to buy real estate 10 years prior in 2010, 2011, 2012. I sold one property, put it into stocks. That's really done well as well.
Yeah, the nice thing about stocks is you don't have to really do anything. You don't have to like maintain it. You don't have to worry about somebody
liquid.
Not paying you rent that month. You don't have to worry about, in the middle of the night, the alarm goes off. It's just, it's passive.
It doesn't burn like, a tenant. It's never happened to me, but it'd be a nightmare. Like a tenant kind of causes a fire and then your property burns down. Oh, that'd be a nightmare. Well, stocks don't do that. But they do other things that are undesirable, like
they do.
Intel really surprised investors, but it's very liquid. You can get in and out very easily. Real estate, you cannot. It takes time to sell a property. It takes time to buy a property.
Yeah, it's a lot of work. I mean, there's positives to it. Real estate. I never got into like too much, and I did have a rental, but I just now my home is my real estate investment. I don't have any rentals. But yes, Circle. I guess that's you don't have Circle, right?
No, I don't own it. No.
It's
so Circle IPO'd at 31, but it immediately shot up. Like you had to be pretty much, you were kind of one of you reserve shares at the IPO price because it shot up. And I could show you the fundamentals of Coinbase and Circle side by side, and Coinbase looks far better. And in my mind, Coinbase is such a better investment than Circle. It's more understood, has better history, it's growing like Circle, it's bigger, it makes more money, makes more cash across the board. And that's another reason why I'm like not touching Circle. It's like, it's somebody else's investment. We got some more questions here. Let me see if I could.
What is ES1 $sign after hours?
I don't know.
Did you mean like Estee Lauder? EST? No, Estee Lauder's not EST.
Estee Lauder is EL.
EL, yeah. Michael Burry is 100% Estee Lauder.
So it looks like BD_ACL agrees on Coinbase. Nice. Estee Lauder is beginning to move, and Michael Burry's all in on Estee Lauder. That's his only position in Q2.
It's so weird. Yeah.
That guy, man. The way he invests, isn't it amazing? Like, he's really successful and he goes all in. And one of the things that I would say is I got the idea to invest in Oscar from looking at Burry's portfolio. So I got in at a really good price, and Burry sold, and then the stock flew up like 40%. So he sold too early, if I could criticize him, which I have no basis to criticize an awesome investor like that.
Well, Buffett makes mistakes. When he bought airline stocks and he lost a lot. So that's the thing in stocks. Even if you're 50-50, you can, as long as the winners you pick pay you enough for your losses on the losers, then you're fine.
Mhm.
Yeah, I don't understand Estee Lauder. I don't see, but I'm sure he knows it better than me.
I think it's potentially like a winner, right? But back to, I think Buffett calls it, you got to know your sphere of competence. That's what Buffett calls sphere of competence. What do you understand? Now, I don't wear makeup. I don't know much about makeup. I don't know what makes a good makeup company. They do have good margins from what I can tell. Estee Lauder has terrific margins, but I look at their top line, they're contracting, they're not growing. So customers don't like their product all that much anymore, and they're not buying more of it. They have good margins, gross margins at 74%. That looks good. They do have some free cash flow. That looks okay. Doesn't look great. But the lack of growth is what scares me. I'm like, well, you're not growing. Does that mean that customers like other products? They like other, makeup companies? And but maybe Burry knows something else. Like, hey, you know, he's the big short guy.
Oh, that's the woman's name, Estee Lauder, who started the company. I didn't know that. I guess that makes sense. So Estee Lauder and her husband Joseph began producing cosmetics.
Uh-huh.
That's a cool name, Estee Lauder.
Yeah.
Um, I mean, I guess it makes sense. I mean, there's definitely demand for the products. It's
It,
lost its edge
yeah.
because it's
It,
been
and
going down.
like in like beauty, new celebrities, young celebrities, typically they tend to like start, beauty brands, and then they sell their beauty brand to somebody, right? Well, is Estee Lauder keeping up with that type of influencer kind of economy now? Those are just a lot of questions that I ask, and I
Yeah,
think, man, Michael Burry is betting big on Estee Lauder. What is he seeing? Because I don't see it.
they probably have. Maybe there's something in the pipeline, like they're looking at acquisitions that he's. Um, I don't know.
Could be. It's really sold off. If you look at where the stock's been over the last 5 years, I mean, it is really sold off. So he might be saying, well, you've discounted the stock so much from the high that was achieved in very late 2001 to 2021, excuse me, to now the stock's down 78%. So is he thinking there's just value there? And if he could just bounce back to from $80 a share up to 200, he made a ton of money. And the stock reached like $370 per share in late 2021. So maybe that's his angle. That's his investing thesis, but I just don't see it. I did see it in Oscar. I kind of took his idea in Q1 and ran with it, and I've made good money on Oscar.
Yeah. I'm surprised he doesn't show up on the list of biggest investors.
Yeah, he
Maybe
owns.
maybe he's too
Yeah,
new investor. Maybe in a few months
could
he'll
be.
show up.
What's the name of his firm? It's so he owns $6.6 billion or $1 million.
$1 million? That's it? 6 million. Oh, he wouldn't show up on the top investors. I thought he owned like billions, but like
I'm
6.6
sorry.
million.
He
That's a
owns
lot.
$13.2 million worth of stock in Estee Lauder. I know that's not like a humongous sum because it's a $28 billion market cap. So he'd be like, no, he wouldn't show up on this list.
No, even if it's, but I thought him alone he had $1 billion of. So it's not that much money, I guess, in the company because his net worth is probably over $1 billion.
Right.
I don't know. This company, he he runs only has 13 million in his whole portfolio.
Mm-hmm.
That's kind of low. That's surprising. What is net worth? 300 million net worth. Okay.
Good for him.
I thought he was a billionaire.
I think he can get by with 300 million.
Yeah, but where's his other money invested then? If it's
Well, this is the fund that he takes. What do you call it? This is a hedge fund. So people that believe in him send him, $100,000, $500,000, and then
it's a
he
that's
has
pretty
this.
small though. Yeah.
Yeah.
Oh,
I don't think he's trying to be the biggest ever. He's like, he has his angle. He has a super interesting background. He's a medical doctor.
oh yeah, I think I've heard that.
He's
Yeah.
educated and trained to be a medical doctor. He's obviously a really good hedge fund manager. He's just a really intelligent dude. He has a glass eye, so he's accomplished, and I don't think he's trying to be the biggest.
Yeah, I mean, 155 million is a really small company. I mean, even for a hedge fund, it's on a smaller side. He's not in. Well, that's probably some of his money. Maybe he's like 30 million of that 155 million.
Mm-hmm.
Or maybe it's all his. No. I don't think he would have a hedge fund where he's the only investor. I don't think that makes sense.
No, then that would be like a family fund. So
Michael Lewis.
the one thing I would say, like Michael Burry in 2023, he was already calling that market kind of like, oh, this is a bubble. He was kind of a bear, and then 2024 he made those comments, and he underperformed the market in 23 and 24, and then this year he was invested Q1. He did well. He was in China, and he was in a couple other companies that did really well, but then he sold everything except Estee Lauder, and now he's just in Estee Lauder.
Yeah. Michael Lewis. Okay, I just met someone named Michael Lewis. I just wanted to make sure it's not the real Michael Lewis. No, it's not. Probably a common name, Michael Lewis. He wrote Moneyball.
Yeah.
You saw the movie, right?
Yeah, I did.
Blind Side. Yeah,
so looking at the market, right? So it's expensive, and I guess the one thing I've got on my mind this weekend is, okay, so how should I be thinking about the second half of 2025? On Monday, we'll have the last day of trading for June, and then on July 1st, we'll officially start the second half of 2025. So more than mission accomplished the first half. I'm up 17. Let's see here. I'm up 17.64%. Great. So where should I be thinking of moving capital towards, right? And have you given that question some thought? Like, what do you think is going to work the second half? The first half, certain things work, but it doesn't mean they're going to work. Because I did a video on Tom Lee today. I don't know if you had a chance to see it, but Tom Lee right now is the number one super investor that I'm tracking. He's up 18 point something %. And what's interesting about him is his portfolio from Q1 to Q2 changed a lot. And his Q2, he crushed it. If you let me share my screen, I'll show you what he's doing.
Yeah.
And he crushed Q2. Let me get my system ready here. So,
yeah, I don't know if I haven't changed in a while. I like to just keep usually what I have and add on, but I'm not getting I don't have extra cash coming in to add on, which sucks.
Mhm.
So I'm just kind of like holding tight.
You want to, I think, add the screen I'm sharing to the
All right.
stage. Okay, cool. All right, so here's kind of like the rankings, right? And Tom Lee in the first quarter, he was way down here. He's like in 12th place. He wasn't doing very well. He actually lost 7.7% in the first quarter. Now, collectively, year to date, he's up 18.37 if you look at his granny shots portfolio. And I was like, wow, good job, Tom Lee. And I looked at his portfolio, comparing what he had in the first quarter and what he has in the current quarter. And so
Does he have
looking at,
NVIDIA? Is that- Oh,
so this is up here, like rows 3 through 38. This is what he owned in the first quarter. And he had a couple winners like Progressive, Abbott, but he had some pretty big stinkers like Quanta Services was down. And then Cadence was down, Eaton was down. He had this one here, PayPal was down for him. Google was down.
well, a
NVIDIA
lot
was
of-
down. Okay. But keep this in mind. Okay. NVIDIA was down 19% in the first quarter. And then in the second quarter, he crushed it with Robinhood, Oracle, AMD. But look at NVIDIA. In the first quarter, it was a dog. And then in the second quarter, it's up 45%. So
Yeah.
it's pretty cool. So his portfolio, he mixed it up a little bit, put some winners in there. And now, like some of his stocks, like GE Vernova, is doing phenomenal. CrowdStrike, Netflix, Palantir. This is just the performance in Q2.
Yeah,
That's
yeah.
really, really good. Quanta, this was a loser in the first quarter and a winner
Oh,
in the
yeah.
second quarter. So it's like bad first quarter, good second quarter. And then this one here is Axon Enterprises. I don't know what that is. He's got a couple laggards here. He's got Apple, of course. Apple's a laggard.
Oh,
And
wow.
then Garmin. Who would buy Garmin? That's an awkward one. Progressive. So Progressive was good in the first quarter, and it's losing money the second quarter. But overall, year to date, he's up 18%. In the first quarter, he was down 7.8%. In the second quarter, he's killing it, up 23.55. Nicely done. He earned his management fee for sure. His investors should be happy with him. Like, good job, man. Glad
It's a
to pay
low
you.
fee.
That's yeah, and
Wow.
the investing thesis of this portfolio is these are what are deemed to be obvious themes that should work. And first quarter didn't obviously work. Second quarter it really worked. So I'll be curious to see how Q3 stacks up for him. But kind of like on the spirit of, hey, Tom Lee made some moves. He improved dynamically quite a bit. As I look at the second half, I'm like, what's the market gonna do? It's like, year to date's 5%. Is it gonna keep? I think it's gonna keep going up for a little bit because we just established an all-time high on the S&P close, so that should kind of pierce through that
Yeah.
that previous high. And once we get beyond that, it's like, all right, cool, I can go up higher. But beyond that, I mean, some themes that worked. Obviously, NVIDIA went up. But I'm thinking I got to start looking at, or I want to start looking at other sectors that I think are going to work. For example, healthcare. I think some healthcare companies like United Healthcare are really beat up and are far more valuable. So I'm going to look there, look at materials, and a couple other categories. But what are you thinking for the second half?
I haven't really changed too much. I'm trying to think of anything different. I think Tesla might be a good one because of the robotaxi. A lot of I think the fact that Tesla is stock went up because of robotaxi, I would think that Google is connected to that, and Google already has a much more solid foundation for robotaxi. because they've been doing it for so long, Waymo. I think Nvidia is going to keep going up. Unfortunately, I should probably buy it then, but I feel like I missed out on so much of it.
Here's what keeps me from buying Nvidia is it's a $3.8 trillion market cap. So,
Yeah.
so just logically, you're like, well, can it double in value? That means it would have to be a $7.6 trillion company to double. That's like, God, man, that's so much market cap. So I'm like, nah, I'm gonna sit that one out. I'm in Qualcomm and I'm in a smaller one called A-Lab, but I'm not in Nvidia. And
this is year to date. Okay.
Yeah, this is year to date. Broadcom I made money on, but I sold it too early. They're doing well. This is more than $1 trillion in market cap. AMD, I've heard really good things about AMD. I'd really like to hear your opinion on AMD. I've heard their technology keeps getting better. I just always have valued AMD lower because they don't produce a lot of cash flow. What's your opinion on AMD?
Yeah, I'm a little more hesitant because they haven't proven themselves like Nvidia. So it's hard to. I mean, obviously Nvidia, it's pretty similar types of products. And Nvidia just has a stranglehold on it. So it's just hard to bet against them. AMD is like betting against Nvidia in a sense. But I'm probably wrong, but I feel like it's a cyclical. Semiconductors are very cyclical, and it can't go forever. It's like commodity. And I mean, I'm totally wrong on this. And if anybody listen to me,
no, I agree with you.
But it's generally how it goes. Most markets, most industries go up overall, but a commodity can't just go up in a straight line because it just doesn't work that way. But like all industries overall, like the tech industry, the like medical industry, it grows because inflation. But semiconductors generally, because like Intel was number one, they were the biggest by far in the year 2000, and now they're not. Is it because they didn't innovate? I guess so. But yeah. If
I'm in agreement with you.
Taiwan Semi, if I was going to invest in a semiconductor company, it would be Taiwan Semi because they should go up no matter what because they just manufacture for everybody.
So the other thing that I'm thinking may work for the second half is within financials. Financials have done well, but the area that I think could do quite well is some of these like private equity companies like Goldman Sachs and BlackRock. And the reason I say that is they probably own a bunch of private companies, and you see where stocks are. Those private companies are worth a lot more. There's probably going to be more deals made for IPOs. There's probably just going to be a lot more for them to do, and they're going to probably have a very good second half of 2025 and probably do well in 2026. So I'm actually going to start my search to try to find like a good stock to buy in that is like private equity, kind of Goldman Sachs kind of company. Your thoughts in that area? Any ideas that you have on companies I should look at?
Yeah, I think that's a good. I think private equity is good because there's with new companies that are coming out in the crypto space, the AI space, and those companies are kind of like they get their fee no matter what the new company IPOs, Goldman Sachs or whoever the investment bank is, they'll get their $10 million fee for helping them IPO or but yeah, I like JP Morgan because they're in both spaces. And they are the biggest, so there's not as much upside. So I think the Bank of America is more safer, but you're thinking the more investment banking route rather than
like a Goldman Sachs, BlackRock, that type of company that isn't a big giant cap. Like JP Morgan is massive cap, right? I think JP Morgan's like the biggest market cap in financials.
Yeah.
So
Yeah, I could see a BlackRock doing well. Yeah.
Yeah. So let's go sectors and then we'll go financials. So yeah, Berkshire is actually the biggest because they're classified as the financials. And then JP Morgan, Visa. So these are big caps, right? So I'm thinking, I already own Citi. I used to own JP Morgan. I owned it for years, made good money on it, appreciated really well. And then I switched horses over to Citi. I'm glad I did so. But as we come down the food chain here, Goldman Sachs might be a good idea, and there's smaller cap, Blackstone. So I'm going to do valuations for these and see where they're valued. What would be a good plan to get into these? BlackRock might be a good one. Noting these and making notes for myself. These are good, like S&P Global. They're pretty stable. And what other ones here? So that's where my head's at. Here's Coinbase again.
Coinbase, 90 billion. With these companies, I would look who's trading fairly close to the 52-week low or not at the 52-week high with a low price to book. Because price to book is generally a better indicator, or price to tangible book as well. And I think, who is it? Is it Bank of America that? Morgan Stanley. I think that they usually have. They might be.
Yeah, they're a bigger cap up here.
Under.
So Morgan Stanley.
Price to book. The last time I looked, but that was a few months ago.
Yeah. So that'd be a good one. So what I'm going to do is, I noted some good names here. I'm glad you brought up low price to book. I'm going to do some homework before we live stream tomorrow. I think tomorrow you and I are going to live stream at 12:30 Pacific. And then I'm going to bring it up. I'll show you my homework and love to get your feedback on it tomorrow.
Yeah, we should. Yeah. Anybody that's trading below book value, which I don't know if anybody is.
So when you say below book value, they would be below 1?
Yeah.
That's less than 1% book value. So I'll take kind of Goldman Sachs really quick.
Probably not. They're probably like around 2, most of them. Or maybe 2.5.
So book value per share is, so right now it's 371. What's their stock price? So this one should be 690.
There should be price to book ratio.
Yeah, I think
so that's like a 1.7, I guess.
PB 1.86, right?
Yeah. So yeah, they're trading below 2, which is pretty good.
And when you said below book value, if a stock had a PB ratio of like 0.7, it would be below book value.
Yeah, then it's trading below book value.
Okay.
Because the market cap is the P and the B is the book value. So.
Okay. Well, I'll set up a little matrix for all the companies I evaluate.
PE is also pretty good for. You could use PE for banks. Price of sales doesn't usually make sense, and PE doesn't. I mean, price to free cash flow usually doesn't make sense. I use
book value when I value banks. Because you can't use free cash flow for banks. It gives you the wrong.
They have tangible book value on this right below it, so that's good. It's still that's under 2 as well. That's a little more conservative approach. I don't invest in banks much. I'm not sure. Like I did at one point, but
I'm doing well with Citi. It's done well. It's gone up nicely. It pays a dividend. I'm not a dividend investor, but when it's been kind of so remember this period of time when stocks are really sold off. So if you bought Citi at the right time, you doubled your money and you got paid a dividend. So mission accomplished. I started buying Citi around this time, and I've done well with it. So I like Citi because when you look at the fundamentals of Citi, like the PE ratio is 13, where let's compare it to JP Morgan, JP Morgan is kind of like the gold standard. See, it's up 210% over the 5-year, which is great. I owned it for years. Great. But when you compare, you look at JP Morgan, their PE isn't bad, 14. Just when you start looking at their price to book and so forth, you see that JP Morgan's priced at a premium, and they deserve that premium because they're the number one. All right. So it's kind of like Costco. Hey, it's just going to keep going up. So anyway, so that's JP Morgan.
Yeah, no, banks are pretty safe investments because they it's kind of like investing in like a supermarket. It's pretty safe. They're going to make money, but you're not going to, well, in this case you did actually, but generally you're not going to double, triple your money in a short time frame unless you pick JP Morgan.
Buffett owns
oh yeah, he does own Bank. He's a lot of Bank of America, like 10%
Bank
of
of America. He owns Bank of although he sold some shares, he owned $32 billion of Bank of America. He's done well with it. Year to date, 7%.
He's owned now for a long time. Bank of America. He's been Amex. I think he doesn't have a Visa in those stocks. So yeah, he likes banks. Me and Buffett don't have the same industry. We have the same thought process in terms of finding good companies and buying and holding, but in terms of the type of companies, he likes insurance companies, commodities, banks, and I don't like those, which is funny. But
he's in Amazon.
He is in Amazon and Apple, of course. He got rid of Apple.
Look at this. He's in Citi.
Mm-hmm. Yeah, Citigroup. Yeah, I'm seeing. Yeah, he has MasterCard too. But he
loves financials. Capital One, insurance companies. He's in Citigroup, Bank of America. They own all of Geico. You don't see that listed here because they own the whole thing. It's not listed as a public company anymore.
Well, yeah, it's private. Yeah, it's a private company.
He owns New Holdings, which is the payment processor down in Brazil. As we get down the list, these are smaller positions.
That's one of the. I own Nubank and Amazon, like him, but I do have some Apple too. Not that much, but he doesn't own Meta. He's never owned Meta. Yeah. And he's buddies with
Bill Gates.
Sorry, why am I saying Meta? I meant not Meta. I mean he doesn't own Microsoft, and he's buddies with Bill Gates.
Totally, they're like best friends, and he's like one of the big. Warren Buffett's one of the big donors into the Bill and Melinda Gates Foundation.
He's going to leave most of his money to them. Mm-hmm. I think, right? Isn't like 90% of his wealth is going to go to that foundation?
Yeah.
And they were like really tight in like the 90s. He could have made so much more than he made on, because Apple he bought it well after he became friends with Bill Gates. But he could have bought. Maybe he didn't want to. I remember when I was younger, I used to like. I remember in college, I used to say how great Microsoft was, and I remember my roommate was like, "But they're like a speck next to IBM. IBM is so great." And I wish I had money when I was in college. I could have, but I didn't.
I bought Microsoft and held it for like 12 years.
Wow.
Yeah, and
that's amazing.
My only mistake was I sold it. Because it's like, dude, that's great. It's great when you make money, but you make money on a stock and then
You're
you
never
look at the
happy.
rearview mirror and you're like, oh man, I could have taken my investment and, gone even higher. But, you
That's
can't,
what
you can't beat yourself up too much. I was wise enough to buy Microsoft to begin with. I made money on it. Okay, mission accomplished. I'm not going to be perfect.
it depends. I mean, if you were like, I remember talking on a stream, and someone's like, "Yeah, I bought Nvidia at like 20 and I sold it at 30," but they could have like 50x their investment and said they barely doubled it. I mean, so it would not. Imagine putting 10,000 into Nvidia and you sold it at 20, but you could have sold it at 3 million.
Right.
Like I wouldn't be able
Well,
to sleep at night. That's why I
so
don't sell stocks.
when I started buying Bitcoin, I could have bought coins, a full Bitcoin. I could have bought it for $1,700, a
Yeah.
whole Bitcoin, right?
Was like
And
was
and
that
at
like
the
in
high,
2013,
my Bitcoin and Ethereum was worth 200 grand, right? But when I was buying at that time, I was putting in like $200, $500. So I'm like, what is this thing, right? Like it's 2017. It's like I didn't know it. I didn't know if I was like burning money, like just okay, it's gonna vaporize and I'll never see that money again. But back to your point of I should have, could have, well, I guess I was wise enough to start looking into it, investing in it in small amounts, and then I started putting bigger amounts, and I've four or five bagged my money on crypto, so I'm happy with it. Yeah, I didn't create millions out of it, but I took $50,000 capital and turned it into 200 grand. So that's
I mean,
something.
I always like overall I've made good decisions, but you're human. I just focus on. It's not like I'm gonna jump off a bridge like upset. Or I can't sleep at night. But the one thing that pisses me off the most, I don't mind losing money on a stock. Well, I'm a little annoyed actually, but I don't. I've lost like 10, 20, 30. I think like the worst I did was like lost 40,000 on Waiter, that SPAC.
Mm-hmm.
I put like 90,000 into it, and it would have been zero because they did.
So I wanted to show one fun stock right there, Scott.
And I sold it.
Oh, sorry, you froze. Sorry about that.
Oh, I usually don't sell stocks, but I sold it and I missed like a 15x return.
So I wanted to show one fun stock that Buffett
Yeah.
owns. He owns the Atlanta Braves. He owns stock in the Atlanta Braves. And,
Right.
Buffett knows what he's doing. He's up 22% year to date on the shares of Atlanta Braves. If there's any Atlanta Braves fans out there and you want to own a piece of the business, you can buy shares in the Atlanta Braves. Warren Buffett owns it.
These sports franchises, they're so valuable. I remember like when Steinbrenner like bought the Yankees. Well, I don't remember when he bought them, but I remember when I was growing up, he owned the Yankees, and they were valued at like they were like the most valuable franchise, or like top three. They were like
Right.
100 million or 200 million. I'm like, nobody would buy a sports franchise these days because Steinbrenner bought it for like whatever 10 million in the 70s. I don't remember exactly, but so like nobody would spend 100 million on a franchise, and now they're like 50 billion. I mean, like it's just crazy how much some things went up. That I thought it was at its peak, but that's what everybody says about the stock market too. Oh, it's at its peak. Don't buy it.
Nice job. You nailed it. Steinbrenner paid $10 million for the Yankees in 1973.
Oh wow! Yeah, so what an amazing, and then and he died. And it was worth a ton when he died. But if he didn't die, if he lived now to his 80s or whatever, it would have been worth. When he would have got like 10 million up to like probably, like I said, 50 billion. I don't know what the Yankees are worth today.
Amazing.
What are the Yankees?
Oh, let me ask. They got to be worth so much.
Oh, only 7 billion. Okay, I thought it I thought it
Eight
would be like,
8.2 billion.
still a pretty good investment for a few million. Yeah,
The 10
that's my
million,
best.
10 million in 73 was a lot of money.
It was. But even if you compound it at like 10%, it's not 7 billion. Like if you take 10 million, and even if you get a 10% return, like you invested it in like the S&P 500, wait, 10 million times, 1.1 to the, it was 50 years ago, right?
Yep, 73.
Mm-hmm. So it's 52 years ago. So even if well, that's actually a lot of money, 10% return. So if you put 10 million into the stock market and you got an annualized return of 10%, you'd have 1.4 billion today. So you still be billionaire, awesome. But not 7 billion.
Awesome.
Thanks, Stinkbid. I did buy Netflix. That's my best investment. And you know why I bought Netflix? Well, part of the reason was I invested in Waiter. It was a SPAC, a food delivery service. They were like Uber, but they just did food delivery. And like 90,000. I thought it was a good investment. I looked at the fundamentals, and I was like, "This is it. This is gonna make me a millionaire." And boy, was I off. I sold it I cut in half down to 45K, but I took that 45K and put into Netflix. And I was looking for something that would give me a good return to get
good job on Netflix.
And now the 45K is 150K. So I guess I'm up 50% from that original. So it turned out okay. So, fortunately, I could say, well, I should have never invested in Waiter and took the entire 90K and put it into Netflix, but I probably wouldn't have done that. The only reason I did Netflix is because I was looking for something that I thought would be like a good company that would be more likely to go up a lot. And Netflix seemed to be at a good price at that point. But I don't know. Ooh. I feel like I don't want to like. I feel like when I'm not going to say I'm so smart. I feel like a lot of it is luck. Like even though it's partly skill, of course, but I think a lot of it is luck. Because I'm not investing in companies, unknown companies. These are all relatively known companies. Like Berkshire Hathaway, it's a known company. I'm currently short IBM. IBM is doing great. I just looked at the chart. It's 250 billion market cap. I didn't realize it was that big. It's trading at its all-time high. So that actually would be a good investment. That's crazy.
Yeah, it's done really well.
I totally didn't see that. I was thinking Intel was like IBM, like it's just a garbage stock, but actually IBM is trading at its all-time high, and it's beating its all-time high the past 2-3 quarters. It keeps going up. Intel's just a garbage.
Dumpster fire.
I lost 15K on Intel.
Yeah. And who's the attendee? Okay, so I respect the comment on Intel. Now I work in the software industry and understand IBM and their marketplace quite well, and it's not where I don't think IBM owns the future like Amazon, Google,
IBM is a leader in quantum computing,
Microsoft, and I think the owners of the future are Google, Microsoft, and Amazon. And I think IBM like 50 years ago, they were in control. They were Apple, they were Microsoft, they were like the kings of the technology kingdom. But their technology is not the tip of the spear anymore. They're a laggard. They still make money. Got it. they're in AI most definitely, but they're not like, they don't have like the brand that companies are going to be like, okay, the smartest people in the room are going to be from Google, from Amazon, from Microsoft. That's how customers are going to think, or that's how companies are going to think. IBM is not in that crowd. They're doing really well as a stock, but I'm betting on Amazon. I own Amazon. I own Google. I don't own Microsoft right now. Kind of wish I did. And I own Meta. I think Meta has an awesome AI strategy. Really excited about it. That's my biggest holding.
Yeah, and I have videos proof. I've been saying it a long time. For years, Meta will be the first 10 trillion, and I have used to say
Nice.
that a lot. And that was well before Nvidia. Nvidia, like, I didn't see that coming, but I still stand behind it. But of course, because I own a stock, but I wouldn't have bought it unless I felt that way. AI is the future, just like the internet in the 90s was the future, even though it took a little time to get there. Now it's obvious. It's not even like questionable. Like, why would you go back to pre-internet days? It's improved our lives so much. But I don't know. I don't know what the next. I keep thinking, because things change so much from like the 1930s to the 1950s to 1970s, because like horse and buggies, like they were obsolete once cars came out. And then landlines were obsolete when cell phones came out. But I think the companies now are different because they're technology, and technology is the future. Technology as a whole. It's not like so. I think companies can easily adapt. Like Microsoft is adapting. They were the leader in software, Microsoft Excel, but they've adapted to do other things.
Agreed.
I don't know.
Yeah, awesome stuff. So I'm gonna need to go, but I really look forward to streaming with you tomorrow, 12:30 Pacific, and I'll do my homework on private equity and come to the conversation tomorrow with what I found, and we can talk about it again.
Yeah, definitely. Well, thanks for joining. It's always fun to stream, and I learned too.
Yeah, thanks, Scott. I enjoyed it. Have a good night. I'll talk to you tomorrow.
Okay, see ya.
See ya.
I want to look at the price to book now that we were talking about it. It's just so hard to value banks. It's very complicated. That's why what's going on? This doesn't work. The Great Recession. This is a website I use to pull industry data, and now it's not working. We got to consider AI should theoretically boost all our dividend champions. Yes, it will. It's going to help. Obviously, it depends what you're invested in. If you're invested in like, Google, AI will benefit, but if you're invested in like Costco, I don't think AI. What's a good website to get industry? Okay. Okay. I don't use this FinViz. I pay my monthly subscription to FinViz. I think it was like $300 for the year, but I don't use it. Okay. So I got to learn how to use it. I'm trying. I want to filter by banks. My presets. Okay, industry. Okay. How do you add price to book? Okay, evaluation. Okay. Okay, here you go. Industry. Banks. I'm looking diversified. Regional banks are just different. Smaller banks. But we talk more about diversified. So price to book is right here. How do you? I was gonna download this, but I guess I can just look at it on the screen. Okay, export. I'm just so used to Excel. How do you guys value a bank? Oh, maybe I don't. I'm logging in. Oh, I think I got rid of my. Okay, I'm still a subscriber. Okay. I lost that screen. On. What screen was I on? Oh, screener. What screen was I on? Screener. Industry. Industry, banks, diversified, and we're doing valuation metrics. Only 19 companies. It doesn't let me. Oh, I have to be elite member to do it. Okay, it doesn't matter. I know how to. I could just copy. I'm pretty good with Excel. I can do it the hard way. Okay. Okay. So these. Good morning. How about VVV? Is that Valvolon? Okay, so there's 20 companies in the industry banking diversified. I'm going to get rid of this. The columns were not. I really want price to book. That's what I'm looking for. How is this filtered? EPS past. What's what's PC? Price to cash flow, right? Don't sleep on Circle. I don't know why, because it's the talk of the town. Circle. Why is it so great? I guess I have to do more research. I'm not really sold on it, but that doesn't mean anything, because I wasn't sold on Nvidia or Tesla, and look how wrong I am. Okay, so price to book. Generally, the lower the better for price to book. I'm going to text Victor to let him know. Wrong Victor. C is the only bank trading below book value. That's a stock he owns. That's a pretty big 157 billion. I just want to. Oh, this sucks. This site. I don't like, look how they did a market cap. They didn't do a number, so I can't sort it. That sucks. How do I fix that? Okay. Okay. I know how to fix it. I get rid of the B. I'll replace the B with nothing. And I think now I could sort it. Okay. It's all billions. Okay. Okay. I think it's okay, rank. Okay, so H. So we're sorting by H, mark price to book. That's generally how you value a bank. That's the best indicator. Stable coins are going momentum. I'm not against that. I do think stable coins and crypto is going to be around and growing. I don't see Circle. Coinbase makes sense to me. I don't see Circle as being the recipient of all that growth. So the only two banks trading below book value are BCS, which is, what does BCS stand for? I should know this, but Barclays. Okay. So it's Barclays and Citi. And Citi is the 7th largest bank, and Barclays is the 16th largest bank. So if you did like, if you track price to book, right, and you only invested in banks that were below 1, like if you looked at historically their price to book and their stock price, they probably move together. So if price to book is like below 8, below 1, the stock should be theoretically low. And then once the price to book grows to like closer to 2, the stock price goes up. So these will be good buys. And JP Morgan would not be a good buy, would be the worst buy, even though it's the largest in terms of market cap. It indicates it's extremely overvalued. Of course, that's just one metric, and you have to understand these metrics better. To add more confusion to the equation, so we all understand what P is. P is the most straightforward thing. It's price, stock price. So it's stock price times shares outstanding. That's how we get the P. Well, it depends. P could just be the stock price, but B has to be then book value per share. But in this example, I'm going to do P is the market cap, so stock price times shares outstanding. B is the book value. So the book value is assets minus liabilities. So in order to understand the B, you have to understand the balance sheet. So this is the kind of the moving target. P is moving all the time, but B is kind of like what we need to understand. And the assets on their balance sheet, like how valuable are the assets? What are the assets? And what are the liabilities for a bank? What does anybody know in the comments? What is the main asset for a bank? It's like the opposite of a normal company. Okay, let's okay. Okay, asset. So what is Berkshire's biggest asset? Or what's a really big asset? Maybe not their biggest, but what is a huge asset for Berkshire we all know about and people talk about all the time? And this particular asset for Berkshire is the biggest by far. Like, you know what an asset is, right? Inventory. Inventory is an asset. So what company has the most inventory? I don't really know, but what asset am I referring to for Berkshire that's bigger than anybody in the world? Twice as big. Like if Apple's inventory is 1 billion, and second biggest inventory in the world was 300 million, right? So say another company had 300 million inventory, they were second in the world. This is Apple, and you could pick any other company, Tesla. I'm just making up numbers. So Apple has the most inventory of anybody in the world, according to this example, more than double second place. So what asset does Berkshire have that's more than double anybody else's asset? What asset am I referring to? You guys got to know this. This is if you don't know it, just Google it. But so the question is, what asset does Berkshire have that is more than double any other company? I'm going to put that in the comments. What asset does Berkshire have that is more than double any other company? Come on, we got to do our due diligence. Scott stock due diligence. This is part of it. Exactly, cash. They have more cash than any company in the world. It's not even close. I think this website has it. This was good. Highest cash. Berkshire has 350 billion of cash. Number 2 is 100 billion, Amazon. So they're triple, which is more than I thought. Treasury bonds too, which is the same thing. Potato. But yeah, Treasury bonds as well. But I mean, Treasury bonds is not really an asset. It's I mean, it is an asset, but it's not on a balance sheet. You don't see Treasury, but you see cash. Within cash are Treasury bonds, money market accounts, cash. Yeah, so exactly. Which is the most important asset, right? It's the most important. It's the only way to start a business. It's the only way to be successful. That's what drives things. They sit on a little too much cash, but that's a different story. So yeah, so they're number 1 in cat. What was I going with this? Now I'm getting confused. Okay, so yeah, okay, so when determining the B for banks, I mean the B, which is book value, we have to understand book value. Okay, that was my question. So Berkshire asset is cash. That's their big asset. What do you think Tesla's biggest asset is? Probably. I'm just guessing. How to value a bank. Now, Tesla's not a good example. Okay, Costco. What's Costco's biggest asset? Come on. And I would gather they might be number 1 in the world and their biggest. What is Costco's biggest asset? I don't think it's cash. But what does Costco have so much of? And every time you go into the store, that's all you see. So what's Costco's largest, biggest asset? Just kind of like doing basic accounting stuff to think about due diligence. Yeah, I'll be right back in a minute. Okay. I think this is good kind of accounting things. Okay, here's a hint. Costco's largest asset. Uber is 0 in this asset category. I mean, alcohol is not an asset. I mean, it is an asset in a sense, but it's not on the balance sheet. I'm talking about the balance sheet now, not just random things. Like alcohol, well, food is everything's on the balance sheet, but it's on the balance sheet in category. I'm talking about balance sheet items. On Costco's balance sheet, their largest asset is what? And this same asset I'm referring to is Uber has 0 on the balance sheet for this asset. They have 0 for this particular asset. Meta has almost 0 of this asset. Meta is almost 0. Costco, it's probably their number 1. Supermarkets are number 1. Like CVS, inventory, exactly. Yeah, inventory. They don't have. I'd be curious to see who has the most. Because this is interesting. This is how you kind of understand things better. No, I don't think. What company has the most inventory on the balance sheet? Because everything in Costco right now is on their inventory. Every single thing in the Costco store is on the inventory. Once you buy it, then it's removed from inventory, and now it's a sale. It's cash. Cash goes up and revenue goes up, but that inventory is removed from the balance sheet. Once again, this is highest cash. Where I don't think there's any websites that list who has the most inventory. whatever. I don't think we're. So yeah, Costco probably has the most inventory of anybody in the world, and Uber definitely is zero inventory because they don't sell anything. Meta, I don't. It's almost zero because I think the what's it called? What are the products they sell? What does Meta sell? Don't they sell the AI the VR headsets? Those are inventory. But all around the Costco store, and there's a lot of stores, and the stuff in the back room, it's all inventory. And like Nvidia has inventory also, and they take the inventory and they don't usually sell it though, but they'll combine it with something else in order to make a semiconductor chip. The land the store sits on, I would think that's pretty high on the list. And you might be right. The land may be more. Let's see. See, I just started out with how do you value a bank? And now we're getting down into this rabbit hole of looking on Costco's balance sheet. But I'm just doing this as an educational exercise. I'm not really doing it to value a bank that I can invest in. Okay, well, we'll just look at it on the screen. So yeah, you were right. Inventory is 19 billion, and PP&E is bigger. So it's not their biggest asset. PP&E is their biggest asset. Inventory is second biggest. But I have a feeling PP&E is not. Part of it is land. They usually have a breakdown. I guess not. I would like to see a breakdown of the PP&E. I guess I keep going down these rabbit holes. So this is their 10K. Let me see if they give a breakdown of PP&E on their 10K. Okay, here it is. So 18 billion of inventory. So their biggest asset is actually buildings and improvements. If you want to break it down a little more granular. Buildings and improvements. That's 23 billion. Oh, Walmart. There you go. Okay. Yeah, that makes more sense. Walmart would have more inventory. Walmart is much larger. Much larger. Many more stores. They're just not as profitable. So Walmart is the largest of a lot of things. They're the largest employer in the world. They employ more people than anybody else. They have more revenue than any other company or entity in the world. And now we just learned they have the most inventory of anybody in the world. Yeah, which makes sense. Walmart is a beast of a company, but they're not as profitable as Costco. Costco is much more profitable, but Walmart has higher PP&E also. That land really. It doesn't really matter, the breakdown. If you're curious, of the PP&E, 135 billion is in the US, 30 billion outside the US. Okay. Biggest asset, number one. So Berkshire, we got it. Cash. Inventory. Inventory is Walmart. That's not their biggest asset, but of all the companies in the world, they have the most inventory, Walmart. What about I read a while back that Costco buys the land their stores are on. I'm sure they do. Walmart probably does as well. That's a good investment. What is the who do you think has the most goodwill? Who do you think number one in the world in goodwill? Is this not interesting to you? Like the viewership went down. It was like 15, now it's down to 7. But I think this is interesting to learn this stuff. But who do you think has the most goodwill of any company in the world? That means who acquires a lot of companies, who overpays. Because goodwill is the premium you pay when you acquire another company. That's why Apple is a beast. They don't have any goodwill. They acquire companies, but they don't overpay for anybody. It's an amazing business model. Microsoft, that's interesting. Microsoft. I was thinking AT&T. Okay. Most goodwill companies. What company has the highest goodwill? Apple. And I just said they had no goodwill, and they have the most goodwill. That's why you shouldn't probably just always listen to AI or searches, because they're not well, maybe I didn't it didn't give me the goodwill, because there's no way they have 2 trillion of goodwill. Apple, I think, has 0 goodwill, but they definitely have 2 trillion. I said what has the highest goodwill, and it gave me the value of their intangible assets, which is different. I understand goodwill is an intangible asset, but there's a lot of things that are intangible assets. Goodwill is just one thing. I'm going to go with Microsoft. That makes more sense to me. Let's financials. Let's just go through Yahoo Finance instead of pulling up their 10K or 10Q. Okay. Even though it's probably correct. So goodwill at 119 billion. MSFT. 119 billion. Does anybody? Let's see what it says. Apple. The last time I looked, they didn't have any goodwill, or it was, if they did, it was really low. I think it's 0. I think thanks Kevin for confirming that. Because I mean, I don't mind talking about like just what popular stocks are out there, and like what stock price or the news. I don't mind doing that, but I do find this more interesting when I kind of delve into the financials and try to pick it apart to understand it. And this isn't that deep what we're doing. I can go way deeper, and I'd like to go deeper. See, there's no goodwill. See, there's no goodwill. Okay, let's go straight to the source just to confirm. Okay. So here's Apple's balance sheet. Non-current assets. See, they have no goodwill. Okay, so that, I'm not going crazy. Like, it's mind-boggling how a company, I know they did drop, but hit $3 trillion and never paid a penny for goodwill. It's pretty amazing. And I'm not bashing goodwill. I'm not saying goodwill is a bad thing. But if you can build it without goodwill, if you can grow, if you can develop it yourself rather than buying a company, that's pretty impressive. And they did that. They created all the products on their own without having to pay, because that's an easy way to buy revenue. Like, say you needed to get $1 million of revenue. Say somebody gave you a challenge and said, I want you to have, by next year, I want you to own a company with $1 million of revenue. You could just, I mean, it's not easy, but if you can scrounge up $1 million and buy a company with $1 million of revenue, it could do it real fast. To actually build a company up to $1 million of revenue from scratch would be much more impressive than just buying a company. Because buying a company is not hard. You just need the money to buy it. But creating something like Apple did is amazing. I think that's interesting, right? Like, I'm much more impressed. 20 billion. So Meta has 20 billion. Which isn't that much. Microsoft, I think Microsoft is the most because of who's that? Who did they recently acquire? Microsoft Acquisition Blizzard. That alone, that $70 billion valuation, that's probably like 50 billion of goodwill. Just that one alone. But this is you may think, oh, why do I need to know this? But this is part of it. It's all connected. It's good to know this stuff. So yeah, I hit it exactly. I got it right. It's 51 billion. That one acquisition alone, it's 51 billion, which is like 40% of their goodwill is that one acquisition. So I'm gonna stick with that. I'm gonna stick with Microsoft as the most goodwill because that makes sense, and that website said it, so I confirm it. Okay, who has the most PP&E? Any company in the world, who has the most property, plant, and equipment? I was thinking McDonald's. PP&E. Well, we know. Actually, is it Amazon? What do you guys? If you can Google it, let me know. Amazon tends to be number one for a lot of things just because of the size. But that's why I don't like relying on like searches or screeners. Screeners are good to get a starting point, but I want to actually look at I don't even trust Yahoo Finance totally. I trust it to a point, but I'd much rather just look at the actual 10K 10Q. But just during this process, just the research process, screeners and Yahoo Finance are fine. This is like how kind of like you understand things on a deeper level when you start understanding it. So their net PP&E, you have to use net 329. Walmart. Wait, did I do Walmart or I'm on Amazon? What am I doing? I always get them. I don't know. In my head, when I think of Walmart, I think of Amazon. Like I always kind of. So this is Amazon. Is 329 billion of PP&E. What's Walmart? I'm sure it's higher. Huh. That's interesting. Walmart is less than Amazon. That almost seems impossible. So if you just change, like I want to look at Amazon's balance sheet. So if I just change the ticker symbol here, I can bring up the balance sheet rather than going to the main page of Yahoo Finance. I'm just shocked. I'm really shocked that Amazon is higher. And I didn't even mean to go to Amazon. It's 350 billion. I was looking at the balance sheet from a couple of quarters ago. Tesla. Tesla has a lot of factories, but I wouldn't think it would be higher, but yeah, it can be higher. It's 52 billion of PP&E. What's Costco? Costco's 30 billion. I mean, Walmart, Amazon 351 billion. I thought McDonald's initially, but it's definitely not because their assets only are 55 billion. So obviously, PP&E can't be. PP&E is 39 billion. McDonald's. I wouldn't have thought Amazon. Why does Amazon have so much? Oh, because they own Whole Foods too. That helps in PP&E. They do own a lot of data centers. Who's the biggest who's like Kroger? Is it KR? Kroger? They only have 32 billion of PP&E. Saudi Aramco. Well, AT&T has a lot of PP&E. And 150 billion. Okay, we have a new winner. Oh no, what am I doing? It was 350 billion. So, AT&T, who's the largest mining company? Rio Tinto. $69 billion. So I think Amazon, which I wouldn't have thought, which Amazon investor relations. like I wanna just look at the 10K and understand what their PP&E is. It's kind of surprising. But this is part of like learning about a company. If you were brilliant like Buffett, and he invested a lot of McDonald's, not just because they sell burgers. I mean, he could have invested in Burger King, but he knows they own a ton of real estate and they make a lot of money on that. So he saw that by looking at the balance sheet. If you don't look at this stuff, you'll never know. Well, you will know when you hear it on the news. Oh, the stock went up 1,000% because they have all this, all this land on their balance sheet they've been holding for decades, and now it's worth so much. Who would have thought this company would be sitting on all this land? The people who are looking at the balance sheet would have thought of it. Does that make sense? What I'm saying? Like, I don't think this is like a waste of time. Okay, 250 billion. This is the 10K, so it's not the same as this number. 350 billion is as of 3/31, but I'm looking at 10K because 10K has more detail, and I want to understand what the okay. So here's their PP&E. I mean, who would have thought Amazon? It's equipment is the main driver, 200 billion. Then they have land and buildings, and I know they have a lot of land and buildings. I just didn't think they had that much equipment. But this is when by kind of digging in deep, this is when you get a lot of good ideas. And this is how, like, sometimes you'll spot something for a company. If a company's like trading below cash, or a company's, then you get like, you may learn something that nobody else knows about. But it could take, like a year or two for other people to learn it. But when it does happen, then you own the stock. You've been for like forever, and now you're up a ton of money. Yeah, too bad. I don't know. I'd like to get a little more detail on what exactly the equipment is. 200 billion of equipment. Because I know they have a lot of warehouses. So I know that's equipment in all their warehouses. Because when you think of PP&E, it's not just land and buildings. In their case, their biggest is equipment, 200 billion of equipment. And I could think of equipment as in the warehouses, they have a lot of equipment in order to sort and track and maintain all their this server and networking equipment. Because in their cloud computing area, they do have equipment also. But in cloud computing, let me just look at it again. Okay. So this is as of, okay. So that's how much, 253 billion on 12/31. I just want to get a little more detail. because it's hard to make investing decisions if you don't understand a lot of things. And this is a pretty big nut to crack. 250 billion. It's not like a few billion. So like that's a pretty big part of the company. Because when you invest in a company, you're investing in their assets, right? That's what the company's, that's their value. It's the assets. What sits on the balance sheet minus the liabilities. So you'd want to know, like if you're buying a small company, you'd want to see their balance sheet, not just the income statement. A lot of people just look at the income statement because it's the profit, but Blackstone holds lots of real estate. Copilot we should be looking at these companies that are trading below cash because we can make a real fast 20-30% profit. But you don't want to time it wrong because then you'll lose a lot of money because things change in an instant. Okay, so okay, Amazon Web Services, that is a bulk of their equipment is in AWS. So the cloud computing is 100 billion of equipment. And then 100, because I was thinking their warehouses can't hold. I didn't think their warehouses could hold $250 billion of equipment. So that makes a little more sense. North America, 100 billion. So I guess it's mainly their warehouses. But I mean, they do own Whole Foods, but I don't think Whole Foods has that much PP&E. Okay, so I think we figured it out. It's good to know these things because I'll give you an example. Like, do you remember when like AOL, was it AOL? There was a stock recently that went up like 500%, and it was a company that wasn't even making money anymore. It was like a dead company. Does anybody know what I'm talking about? I thought it was AOL, but AOL is not around anymore. And then people were like, why is the stock going up like 500% or 800%? And the reason was that company held like, $50 million of Alibaba, I think it was. They had 50 million of Alibaba, and the market cap of that company went from like, it went up a ton because Alibaba went up a lot. So if you know that, or if a company's holding 50 million of Alibaba or any stock, right, and that company's market cap is like 10 million, then you could do a little more digging to figure out there's an arbitrage opportunity. But does anybody know what I'm talking about? What company? So a company was sitting on a lot of Alibaba stock. We know like Berkshire, that's their business model. They own stock in companies. They own stock in Apple, in Bank of America. They own stock in a lot of companies. So if Apple goes up a lot, Berkshire has to go up. And if Apple goes down, Berkshire goes down. They have gotten rid of a lot of Apple. I mean, that's what their holding company, Berkshire. That's the type of company that the business is set up as a holding company. They hold stock in other companies. They don't operate anything. They don't make anything. They don't sell anything. They just own stock. And the stock they own is of companies that make and sell a lot of stuff. What company had Alibaba? It's too broad of a question, but does anybody know what I'm talking about? Yahoo Japan. I think that was it. It was not AOL, it was Yahoo Japan. Yahoo. Yeah, it was like, Yahoo stock went up when it wasn't making any money, and nobody uses Yahoo search engine anymore. I can't remember what year this was, but the stock went through the roof, and they're like, "Why is it going up?" They're not even making any money or selling anything. It's because they had all this Alibaba on their balance sheet. Which if you were like Warren Buffett and were reading through balance sheets and you saw this, you could have made a ton of money. These are the kind of things I'm trying to understand better and learn, but it just takes time. You can't sift through the 10K of 1,000 companies, because if you want to read it and understand it, it just takes a long time. Okay. I'll get off this topic. Did you hear that Bill Ackman plans to turn Howard Hughes into a holding company like Berkshire? I know he wants to be the next Berkshire, the next Warren Buffett. But doesn't he own he owns a hedge fund, which is the same thing similar as a holding company, similar to like what Berkshire does. They just buy stock in other companies. But I think he's mainly private equity. He doesn't buy stocks in publicly traded. It's mainly these smaller, lesser known. What's his fund? Bill Ackman, Pershing Square. Pershing Square. Performance. Maybe it's not public. Pershing Square. What? Okay. Is this it? Portfolio. Bill Ackman, Pershing Square Capital. Okay. So Pershing Square trades at $3,900 a share. But this is not the same. Is this? I guess it is, because we just saw on the website they trade in the London Stock Exchange. But yeah, Bill Ackman's Pershing Square is not publicly traded in the U.S. I don't think so. Is it? Am I? Okay. It trades in Amsterdam, but not in the U.S. Pershing Square. Okay, does anybody know, is Pershing Square, can you buy it, or is it like an ETF? Pershing Square stock ticker. I've never heard of it before. I guess it trades OTC. He trades on the London Stock Exchange, but he lives in the U.S. in New York City. I wonder why he's trading on the London Stock Exchange. The market cap is 11.6 billion. It's a over-the-counter stock. He's doing it through HHH, Howard Hughes Holdings. No, I'm not. That's a $4 billion. Does anybody? It's a real estate company, Howard Hughes Holdings. So it's a real estate company. It's not a holding company or a hedge fund. But he does have a hedge fund. Are you saying he's going to acquire Howard Hughes Holdings and turn it into a Berkshire Hathaway? Is that what you're saying? But Pershing Square is a hedge fund that you can't. I guess you can buy it OTC, over the counter. And it's a pretty big company. It trades on the London Stock Exchange. It trades publicly in London. London is a major stock exchange like the Nasdaq, but in the U.S. he does not trade. Okay, the market cap 11.6 billion. That's a market cap. That's the value of the company, and his portfolio, the stocks he owns, are valued at 11 billion. So Google is his biggest. No, it's not his biggest. His biggest is Uber, then Brookfield. That's another real estate firm. I guess Howard Hughes, Brookfield makes sense in that respect. RBI, Restaurant Brands. I thought it was RBI. No. What was it? RBI at one point? Okay, Restaurant Brands. Howard Hughes Holdings, he owns 12% of that company, and somebody said it sounds like he's going to acquire the whole company and turn it into a Berkshire. Chipotle, I kind of like his investments. Google, Hilton, Seaport, and Hertz. It doesn't trade in the U.S. He wanted to do an IPO, but the initial price wasn't getting traction, so he canceled it. Okay. See, I'm learning something new. Thanks, MP. HHH is building houses in Arizona. Yeah, I'm sure HHH is building houses in a lot of places. It seems like a pretty big company. So if you want to learn about this, I suggest going to even Wikipedia just to understand what the company does. It's a real estate development and management company. That's what I do. I'm the controller at a real estate development and management company. I'm telling you, it can be pretty stressful. I learned a lot about real estate development. So if you guys want to understand, it's probably be pretty boring, but I'll just tell you. So what we do as a company, not what I do, is my boss. It's a small company, like 6 people. So my boss, he's always out there looking to buy land, and it's usually in California, since it's close. But we also buy land in Nevada. So that's what he's doing a lot of his day. He's amongst a million other things, but looking to buy land. So he'll go to an area, usually not in a big city, because in a big city there's not like a plot of land. Like if you go to New York City, there's not just land sitting there. It's all developed. I mean, there's nothing you can do. You can't develop new. You could buy a business in Manhattan, and you could buy the real estate. You can even knock down a building and build your own building, but you can't buy a plot of land because it's just not there. in a lot of big cities. So he's looking around to acquire land. And to give you an example of how like he might say, okay, there's a $1 million for this plot of land. It's 1 acre. This plot of land, and it could be in like a town with a population of like 50,000 people, and they don't, and they have a lot of businesses. They connected to a major city, but maybe um, like a franchise, like a Wendy's wants to get Starbucks is a really popular one. So we use Starbucks. Say Starbucks wants to uh, um, operate a business in what's a good town like I don't know. Okay, cities in California. What city do you guys live in? Does anybody live in a city around between 40,000 and 100,000 people? What town? Name a town you guys live in. I don't want to just say town X. I thought it'd be more fun. Does anybody live in a city like that's maybe 50 to 100,000 people? Well, not Brooklyn. You can't buy land in Brooklyn. It's all bought. It's all been developed. But if you're a real estate development company, um, you have to look outside of a major city, and you don't want to go too far outside. You don't want to go where only 1,000 people live and it's hard to get to. But you want to go to a place where it's a decent population, 20, 30, 40, maybe 70, 80,000 people, and ideally connected to a major city. Like you can go to a city, you can develop land in a town that's 45 minutes from Manhattan. Albany. There we go. I'm sure there's open plots of land. Albany, New York, or Albany, California. It doesn't matter. So this is the process. This is how our business runs. So it wouldn't be New York because we're not going to go across the state. We stick to, within like an hour, within 100 miles of the office, so we can get to it. But anyways, let's just pretend we're in New York City. That's where our real estate development company is. So we drive up to Albany and we see a plot of land. And just half a mile down the road is a really big mall, right? So people are already going to that mall. So this plot of land could be great for Starbucks. Starbucks wants to be in Albany, and there's only 2 Starbucks in Albany, but they want a third. And maybe the eastern part of Albany doesn't have a third, but they have other businesses going on. So anyways, we talk to the real estate agent who's trying to sell the land. We put an offer in for $1 million, and we buy the plot of land. And if the owner of the land is interested in selling it, they'll sell it to us. It could just be land, empty land. Like we have bought like a plot of land. I mean, you don't want it in the middle of nowhere, because if you can't get to it, no one's going to go to your business. Okay, this seems like it could be a. Well, this seems more residential. Okay, I'll use this as an example. What happened? Oh, okay. So I'm just going to give you an example of the process that we go through, or I guess other real estate development companies go through. It could be a really lucrative business. Just takes many years to build up the business. So we'll be driving around looking for sale signs, or maybe we'll go on a map, and we see this. This is all vacant land, right? And pretend these are homes, so people live there, so they can access this area. And maybe there's a mall right behind it. Like right here is a mall. A quarter mile down the road is a shopping center, a mall. So this is going to be converted into a shopping center, but we just want to buy this one piece of land for $1 million, this one plot. Maybe other businesses are going to buy this other plot. So we put the offer in. If they accept it, there's back and forth. We have to go into escrow. We have to put a down payment. We have to show proof of all these things. We need to get the money either through the bank or use cash on hand. So we give $1 million to the person that owns the real estate. 108 degrees. It was hot in where I'm in California. It was over 90. It rarely gets over 90. So we may already have Starbucks as a tenant, because we'll have relationships with different companies who are looking to open another brick and mortar location in a certain city, and sometimes, like in certain places, unless someone's in a shopping center already, right? And store goes out of business, so they're looking to lease. They're looking for a new owner. So that's one way to start a business: is wait for someone's lease to expire or somebody go out of business. But not every town has a shopping center with a lot of stores. There just might not be as much land developed, and that's why companies like us have to come in to buy the land and develop it. So Starbucks says they want to get a store in Albany. There's not really many locations they can get a store because it's all the other. Well, maybe they don't want to go into a shopping center. They want their own individual unit. So after we buy the land, then we have to spend like $3 million to develop it. We have to, before we buy it, we have to make sure you can build on it, like the ground can support it. And if it can't support it, you may have to go underneath the earth and stabilize it before you can put a structure up. And obviously you have to get all this approved by the city, permitting, things like that. There's a lot of permits and a lot of like fees and like a lot of like small little things you wouldn't even know what needs to happen. Just because you have the money to start a business or buy land doesn't mean you can do it. Because we may want to buy the land and put a nightclub, a strip club, and the town they could say no. And towns have said no. Some towns, I know in San Francisco, if you're a McDonald's, a lot of places won't accept big chain franchises. They want to keep it where it's more kind of like homegrown part of the city, not just these big corporate chains all over the place, like Walmart, Costco, Burger King. Like a lot of towns just don't want it. They'd rather have like these, Jim's Burger Joint. They'd rather have that because Jim lives in the town with his family for the past 40 years. So we build, and it may cost $3 million to build. We have to build out the land. We have to erect the Starbucks building. And there's different ways to do it. Sometimes we just buy the land and prep the land, and then the business can build the structure on top of it. And if they do that, if they build it, then we'll give them a TI allowance, tenant improvement. So maybe we'll give them $500K to put their building up. And why do we do this? Because it's our land, and we want someone there to pay us rent each month. So we're willing to kind of share the cost in a sense. Because if we didn't, it's like if you want to live in a house, you can't just move in and put your stuff in the house. I live here. You have to pay for the house, right? You have to pay whatever the house is worth, because someone had a. Unless you can buy just the land. You know, if a house cost $1 million, right? Maybe the land costs $350K. If there was no house on it already, like say your neighbor had an empty plot, your house is $1 million, and there's an empty plot of land. Maybe the empty plot of land is like $350K, and then you have to put another $600K to build a house. So you don't just get the house for free. Same thing as you don't get to just move in for free. You have to pay for it. So we build the structure, and that's what I do. I have to work with the banks and our investors, because our investors give us money and they own equity in our company, or the banks lend to us and we have debt out to the banks, and we have to pay monthly payments until we pay the debt back. So I have to get money from those two sources, debt or equity, and then give $1 million to whoever owns this plot of land. It could just be an individual, it could be a big company that owns the land. And we have to find a GC, a general contractor, to prep the land to make sure we can build on it, clean it up. There may be like, sometimes there's trash with an empty plot of land. This is really nice, but if it was like if it was like in an area where it wasn't so nice, a little, beat up looking, people may throw trash there, or their old couch, they just throw it in there. It's just a junk place. That's like bringing the video game, taking currency game model to the real world. So we buy the land, we erect the building that could cost $3 million. We have to get a general contractor and pay them maybe $200,000-$300,000 to kind of organize the process of building, because the GC just makes sure things get done. They may build things, but if you were building a Starbucks, the GC would have to hire a lot of contractors. They may have to hire a company that put in the foundation, and they have to hire a company to put up the wood panels, the walls, and then they have to hire a company that puts in windows. They have to hire a company that does plumbing. In order to do plumbing, you have to get approval from the city, and you have to get a contract with like PG&E, and it's not cheap. It could be a couple $100,000 to get plumbing set up for the Starbucks, and then you have to hire someone to paint the inside once the building's set up. Paint the inside, and then you have to. Once you build the structure, then Starbucks handles that part. But the GC would have to get the structure set up, electricity set up, plumbing set up, make sure it's a stable building, it's up to code. And once they get the shell, then we'll give Starbucks like $500,000 of TI, or depending on, that's negotiable, depending on how much they do in the process. And then Starbucks just gets a shell, and then they have to decorate it themselves. They have to put in their furniture, they have to paint it their colors, put the sign up. And then they're open for business. And then they pay us, $25,000 a month for rent for the next 10 years or whatever it is. And then when we collect our rent checks from all our tenants, I take that money, I have to pay my salaries part. I get, pays my salary, pays the rent for the building we're in. I have to pay the interest back on the loans we took. I have to pay all our bills, utility bills, and then whatever's left over goes to the equity holders. The people put equity into the deal. That's kind of like a really high level on how it works. But it's really involved. There's a lot going on. And this all just started from, I'm just trying to get the book value for this okay. Electric too. Yeah, exactly. That's a big process. You have electric, gas, cable, and especially when it's an empty plot, that it has to be, the infrastructure has to be laid out. Like, it's not like we can just buy a toaster and plug it in. There's nowhere to plug it into. We have to build it out. That's why you got to get approval from the city before you disrupt the land. But if you do build it out and have this nice business like a Starbucks operating, then you can sell that. You can sell that, you can't sell the Starbucks, but you can sell the land, and you could sell the lease. Because the person buying the land also gets the Starbucks tenant and collects their rent payments. Instead of buying land and building it yourself, you can just buy it all done. Because I know some people who bought land and built their dream home on the land. That's one way to do it. I mean, I wouldn't want to do that. I didn't even want to buy a house that needed painting. This house, it was move-in ready. They redid the whole house, and then we moved in. We did some changes, but very minimal. Of course, over the years, we repainted the house, the inside and the outside. We added, I don't think we added new windows. We have sliding glass doors. We have new sliding glass doors because the old ones were hard to open and close. Of course, we had to. There was a refrigerator here when we got here, but we had to furnish it. So most people would buy a house that you can move into, or with limited. You can move into, but you have to clean it up a little bit. Most people don't want to buy a plot of land and build a house. You could do that. It might actually be cheaper that way, but it takes a lot of time. It's stressful, and you're probably gonna get ripped off by a GC because that's what they do. But like, my company knows what to look for and how much to pay. So that's part of our job. That's my job, to make sure they're staying on budget, the GC. If they go over budget, I have to find out why. And I pay them every month until the $3 million is paid off. Usually takes, depending on which project it is, but if it's a single Starbucks or a single store, it could take three to 5 months. But if it's a big shopping center, we have a really big shopping center with like a dozen stores. We've already been 3 years into it, and it's going to take another year to get everything erected and done. So it could take 7-8 years from start to finish for a big shopping center. But for it's same thing. If you wanted to buy a home, you can move into a home in 3 months. You just have to go online, find what homes are for sale, and if you find a home that's for sale, you put an offer in. You could be in 3 months. You could from beginning to end, you could be inside the house, or even less if you have all cash. You do have to find the house, but so just different ways. You need to be near a place of employment. What do you mean? If we built a Starbucks, you need to be near places of employment, or if we moved into a home? Yeah, I mean, the more people in the area, and the higher the income, the better it is for a business to succeed. But I'm still stuck on this. Okay, so okay, I spent like half hour talking about real estate development. Okay, so we're back to how to value. Is anybody with me for the past hour or so? It seems like we're just going in circles. We are talking about a lot of things, but it's Lewis Black, the comedian, had a bit about Starbucks on both sides of the street. And that's true. That's funny. I remember Manhattan. I was with my roommate in Manhattan, and we were standing there, and we could see, I think, 3 or 4 Starbucks from where we were standing. So it was just funny. Like, oh, there's Starbucks right here. Right there, you can see one in that shopping center, and right there, you can see one. The Best in Show, really funny movie. I remember this couple was talking about how they met. It's like a really yuppie couple. I think they're both lawyers, and it was Parker Posey. She's so funny. They were doing these interviews. And they're like explaining how they met, and they're like, "Oh, because I was at the Starbucks on 5th having my caramel macchiato, and I used to go there hoping to see you there, but when I would go to the one on 5th, you would be across the street at the Starbucks on 4th, drinking your chai latte, and then the following week I went to the one on 4th hoping to see you, but you were the one, and it was but Subway was worse. I think there's 300. I don't know if it's still, there's a 300 Subway restaurants in Manhattan at one point. 472 in the city of Manhattan's a small place. It's pretty real dense. Like literally like every block there's a Subway restaurant. Okay, so Kevin, thanks for staying. So this all started with how to value a bank, and I said the best way to value a bank is the price to book ratio. And in order to generally the lower the better when you look at price multiple, like price to book, PE. So if you're below 1, that means they're trading below book value. So price, the numerator is stock price times shares outstanding. So Citigroup, they don't have the stock price? Oh, $71. Wait, my fair value, 70. Why is this January stock price? Okay, 83. So the price of Citi is 83 per share. And then the market cap is 158 billion. So there are 1.9 billion shares outstanding for Citi. So if you own one share, the value of that share is $83, and you own 1 over 1.9 billionth of the company. So if you cut up the company to 1.9 billion pieces, and you took one piece out, that's one share. That's your value of the company. So P, market cap, is just stock price times shares outstanding, which is 158 billion. 158 billion. And we know they're trading below book value. So does this imply the book value, the bottom of the equation, is that going to be higher than 158 billion or lower? Book value. Is book value higher than 158 billion or lower? We know the price to book is 0.8. So having that information is the book value, the bottom of the equation, is it higher or lower than 158 billion? I mean, we definitely know. We don't. Well, we do know the number because it's just math, just simple algebra. But I'm not asking you for the actual book value. That would be a bonus. If you know the book value, don't plug it into a calculator. Just estimate it. Like David said, it has to be higher. Of course, it has to be higher because the price to book is below 1. So is it like, when I say higher, is it 170 billion or like 700 billion? Like just estimate it. Or is it like 160 billion, just slightly higher? Like, what do you guys think? I mean, you could do the math pretty quickly, but just estimate in your head. Well, I know it's 0.8. I know 158 billion over X. 158 over X equals 0.8. So if X was 158, jeez. So here's the equation to visually look at it. Like, for example, if the x, that's what we're looking for, right? If the x is 158, then this will be 1, because 158 over 158 is 1. If the x, so it's definitely higher than 158. We know that. So if the x was 316, which is 158 twice, right? Then this would be 0.5. If the x was exactly double, which is 316, then this will be 0.5. So without doing it in the calculator, we could probably estimate it in a range. We know it's between 158 and 316, probably closer to 158, because if it was closer to 316, then it would be close to 0.5. Yeah, definitely higher than 158. We know it has to be between 158 and 316. What do you think? 170, 180, 190? Or would you go higher, like 220, 230, 240? 158. Because if it was 316, it would be 0.5. And we know it's not 0.5. And if it was 158, then it's exactly 1. And we know it's not 1, it's 0.8. So what would you estimate it to be? 170? 170 is 0.9. So yeah, like 180. It's hot. Maybe 190. So 190. Could be 200. It's just a rounding thing, 0.8. Like it could be 210, which rounds to 0.8. So yeah, I mean 180, 190. I mean, you can do the math, but I'm saying once you get the stuff in your head real fast, I know by looking at it, like I know the stock price, I know the market cap is 158 billion, and I know the price to book is 0.8. So in my head, I'm like, okay, then the equity is probably like 200 billion or 190 billion. So you could do it real fast, and then someone's like, "How'd you know?" Then you're like, because like you know it has to be higher. Are you with me? So anyways, so the book value, the denominator of the equation, that's what you have to understand to figure out why are they trading below book value. That's a really difficult thing to do, is identify that. And even some experts would have a hard time explaining explaining this part of it. It's why is it so hard to find a balance sheet? Come on. What's going on? How come it keeps doing this? Okay. Balance sheet by segment. Okay. I guess this is good enough. I was looking for the full balance sheet, not the segment balance sheet. Maybe if I oh, is that it? Okay, here it is. It's hard to do. It's gonna be hard to screenshot it. So we know equity is assets, which is 2.4 trillion. Minus the liabilities. So 209 billion. So remember we were saying it's around 200 billion, the equity? Well, I said 190, but it's actually 209 billion. So the price to book is 0.75 or 0.8. So that's the hard part. Like, what is the book value? Why is the book value higher than the market cap? That seems like a great value. And I do agree it's a great value, but we have to look at the assets and the liabilities. What are their assets? Cash. But their really big asset is the deposit. So when you put money into Citibank, when you deposit cash into a savings or checking account, that's on their balance sheet. But it's not an asset. It's actually a liability because they owe that money to you. So this 1.3 trillion, that's how much money is deposited, the deposits from its customers. And then they take that money and they loan it out to people. So that's their biggest asset is loans. Because debt, that's an asset to them. Because if you borrow money from Citibank, that's debt to you. That's money you owe to Citibank. But in Citibank's eyes, that's their asset. That's their value. It's a debt. And this deposit is Citibank actually deposits money at other banks. And they have $250 billion deposits. And the other assets, securities borrowed and purchased under agreements to resell, net of allowance, 274 billion. Trading account assets. So it looks like they're also investing the money. I mean, these are pretty safe investments, but putting money into a trading account, I don't know if they're putting into T-bills or something. And then all these debt securities, which is money they lent out. but it's their assets. So the total investments, which is a lot of that, is money they've given. They have cash, they deposit at their bank, I guess. Loans. So about 25% of their, or 20% of their assets are loans. And that's kind of the thing you want to look at. You want to look at the loans, because that's really the risky part of the balance sheet. This stuff isn't too risky. This 276 billion, it's the loan. How did I get? Wait, what did I just moved over. So you want to look at the credit quality of the loans to see, and you want to look at the loans in default. I don't know why I just jumped off that screen. Okay, yeah, so 675 billion. And they should give a breakdown. He has a 675 billion of loans, and it's made up of residential first mortgages, 114 billion. So people who want to buy their home. Credit cards, that's a loan. When they give you, when people you buy something on credit using credit cards, that's you're taking on debt, and that's money that's owed to Citibank. So some people will default on these loans, and that's a big issue. This is North America, and then they have outside North America, so residential credit and small business loans outside of other countries. And they give a breakdown of the corporate loans. So like when my company takes on a loan to build a real estate, this is a big concern. The commercial loans, because people are saying there's going to be a lot of defaults on commercial loans. So you want to look at the default rate. So here's the 140 billion dollars of corporate loans, 58 billion of commercial and industrial loans. It's when they're due. I'm surprised they don't have the default rates. That's what you want to see. The delinquency. Usually in the PowerPoint slides, they would show you how many loans are over 90 days delinquent. Okay, so down here. These are the loans for retail banking. Like if you take a mortgage or a credit card. I was looking for the corporate loans. It's just so much stuff in here. It's hard to. Consumer loan. I mean, consumer loans important too. So these are what percent of their loans are 90 or more days past due. So you can see it's pretty low, 0.5% to retail banking loans. Credit cards, it's about 1% delinquent. So you want to track these ratios, and if they get really high, like the default rates, or well, before the default, you want to see what's past due, and if these numbers start growing, that could be a big concern. I just want to see the corporate loans, delinquency rate in corporate loans, but okay, here it is. Because those are big loans, right? And people are saying default rates for commercial loans will sort of start getting up there. Yeah, did you get your degree in accounting? No. Finance. But I didn't really learn that much until I started like the channel or doing it on my own. So there's a 300 billion of corporate loans. And 300 million of that is past due. So about 1% is past due. Or yeah, past due. Actually, 300 million is past due. 54 million. Oh no, this is 259 plus 54 is 313. So most of that is 30 to 89 days past due. Only 54 million is over 90 days past due. So that's not too bad. I just learned by just doing it. Just keep doing it over and over. And consumer loans delinquencies. But this stuff it's hard to talk about this stuff and keep your attention because it's getting so like but this is the kind of thing you want to do so you understand the book value, because 0.8 is really attractive, but if they have a lot of loans that are like, for instance, 0.8 is obviously a lot better than like UBS's 1.3. But if Citibank, like 3% of its loans were delinquent, and UBS had 1% delinquent, I'd rather do UBS, because once these 3% of defaults run through, it's going to erode the book value of the company. But we're getting a little deep into it, and I don't mind doing it, but it's getting a little hard to explain it. But that's kind of the idea. I think that makes sense. Okay, this is a long stream. It's been 3 hours. I'm not sure how I did it for so long. But yeah, me and Victor are going to do tomorrow. Yeah, thanks for watching. Hope you learned something. And yeah, see you later. Have a good night.